Good evening, everybody. All right. I was trying to narrow down the number of charts that we would go through tonight, but it didn't work. It's too many. All right. As we can see, the uptrend is still in progress. Move this a little bit this way. Ever since the big morning star signal, then the doji sandwich, then the fact they couldn't close it below the T-line makes the Dow most likely heading for at least a 50-day moving average. So this is another benefit of candlestick analysis, is that you don't have to be a genius to, or not, that's not the right word. You don't have to be astute at technical analysis to be able to see what's happening based upon knowing what our signals are and what our confirming indicators are doing. So if we know the Dow is heading up and not doing any sell signals, the NASDAQ opened lower today, and even though it was only up 2 points on the day, they were buying since the open. So it told us the bulls hadn't left this market. The S&P 500, kind of the same scenario as the Dow, traded indecisively, but was trading right below the T-line. Nothing changed as far as investor sentiment. But the coup d'etat was the transportation index was up strong, or reasonably strong. So so this basically tells us we're still in a nice steady uptrend. Let's see. Indexes also had weekly morning stars. Okay. Let's see. Before we go any further, anybody have any problem with passwords tonight? Okay. I don't think we have a password on, do we? Okay. Well, it's going to be for a little bit. Got a lot of people testing the site, or the chat room. Now, here's one thing I'm just noticing in the transportation index. Got kind of, even if you start from here, start from anywhere, you got a 0.1, 0.2, 0.3, about the same as 0.1, 0.4 above 0.1 and whatever this one would be called. And then 0.5 way down here, that usually leads to a very big blast off to the upside. So not anticipating there's going to be a huge move to the upside, but right now there's no reason to think not that it won't or that it couldn't. All right. Went short today on crude oil. Because notice crude oil is doing this little slow curve to the downside, making a wave 1, wave 2, wave 3 downside possible, which if this breaks down this magnitude, that could take us down into about the $65 range for crude oil. I hope there's not a test on transports. Don't understand the points. Oh, this is what we call a spreading pattern. Notice how it's spreading out, opposite of a pennant. So 0.1, 0.2, 0.3 is usually lower than 0.1, 0.4 is higher than 0.2, and 0.5 is lower than 0.1 and 3, which means this move right here is usually a big blast off. This usually is kind of a buildup of a very strong price move. I was laughing because Achilles sent me his phone number and said he thought it should be on my speed dial. Okay, let's see. What were we looking at? We were looking at crude oil. Crude oil failed here at the 50. Now it's doing a bearish J-hook. Still could be heading lower. Like everything else, when the market was trading at up here, everybody thought, oh man, they're going to $125 a barrel, blah, blah, blah. And it turned right around. So like any market, when there's not enough oil or there's not enough corn, not enough hogs, prices go up and everybody projects it goes up, it's going up a lot further. When it turns around, everybody projects it's going down a lot further. The gray line right here is the 20 simple day moving average, a black ice failure. The 3T is this little green line up here. Let's see, what else do we have? Let me take a look at some of the commodities real quick. Cattle is just in a slow uptrending, hard to trade right now. Soybeans took off today, but let's make this bigger. Notice where soybeans open today, right smack dab on the T-line. This is what you call kind of the T-line crunch. We'll get into this later. But notice how the T-line kept pushing and pushing and push until they broke through the 50. Now, if you're trading soybeans, this is why I use the 10-minute chart, because notice what happened on the 10-minute chart. It broke out. The only worrisome spot was right here. And what's the logic, or what do you do on a worrisome spot? See what it does the next, if it started opening and trading lower, it was time to get out. The fact that it was holding up above the T-line this long, give it a little bit of benefit of the doubt that the T-line's still in progress. So this is basically the type of charts I look at when I'm trading. And this is what we call the bobble. And this is somebody was asking the difference between a bobble and a T-line crunch. A T-line crunch usually just kind of steadily moves up to the resistance level. A bobble comes up, hits a first resistance level, comes back to the T-line, and just kind of bobs in there. And as long as it doesn't close below the T-line, they're going to take it right back up again. The black line is the T-line, the 8 exponential moving average. All right, so anyways, that's kind of how I trade commodities. And speaking of commodities, what else are we going to look at? The dollar. Dollar is starting to get caught in this downtrending channel, which means after a big, strong move like this, it's not unusual for them to pull back to the 50-day moving average before they can get started on the next move. This is gold. Notice how gold came down, popped up to the 50, and then failed. So we're probably in a downtrend. Where? Probably back down to the bottom of the trend channel, which means wave 1, wave 2, wave 3 is in progress. Silver, somewhat the same scenario. Big down move. Notice how indecisive. Let's see if I can get rid of that darn thing. Where is that? Pointer tools. None. Okay, that seems to work. Notice when they started bringing it up, it was very indecisive. Oh, pshaw, where did that thing come from? Now get ready to go short on wave 3 to the downside. Oh, I don't know. Let's see. What is F dot? Is this platinum or is this palladium? Same scenario. Wave 1, wave 2, going into wave 3. Oh, let's see, dollar, interest rates, 10-year note, looks like it's in a J-hook pattern setup. Still not back up above the T-line, but we're still relatively at the high range of rates or for bond prices. Means we're interest rates really aren't going to affect the market all that much. I guess that's about it on the commodity side. Let's take a look at corn. I'm sorry, wheat. Wheat, there's that T-line crunch pushing you right up through the resistance level, which was a 50-day moving average. All right, and okay, let's take a look at some of the things that we should remember. I don't know why we have this one on here unless I have mistyped it. CP. Oh, I know why we had this one on here. Notice what this day did right here. And notice what type of pattern we were coming out of. First of all, you had the fry pan bottom, a little pullback, a J-hook type pattern. And they broke it out through this level on a gap up. And notice where they gapped it up. Above this gap up. Maybe I can't tell whether they actually filled the gap or not. Doesn't look like it. But then what do we see the next day? Doji, and then they took it right up, back up again. This is the message, and we call it, and this is what I'm going to call it, is the message. And the message is there was dramatic buying going on right here, coming out of a pattern. So all we do is after they've gapped it up, we're looking, seeing profit taking. Yeah, it's not a, it's a huge island reversal bottom because you can draw a line right around here without hitting anything. But this is what we look for. After that dramatic gap up, see if it doesn't do a doji and start back up again. The reason I point that out is because we had a nice fry pan bottom, little cup and handle, gap up today in NQ. Now we'll just wait and see if they do kind of a doji and then start taking it right back up again. Why would we suspect that? Because where do they break out of a fry pan bottom? Right about where it starts. So you want to keep an eye on this one. People were saying, well, should we take profits? We could have here, or because they gapped it up out of a fry pan bottom, I'm more apt to hang on to it, waiting for that big price move to continue. That gap up, again, gives you a message. RGLS. I was kind of showing in the options trading room that this is one where do you want to risk money after a stock's doubled and then continued higher? Well, the best way to mitigate that is buy the calls. Because if this keeps going big, like it looks like it could, breaking out into new highs, potentially going back to the top of the trend channel up here somewhere in the $23, $24 area, or it has the potential of whipping right around and coming all the way back down here. So if you were buying the stock up in this area for 17.5, there's still a lot of upside potential, but there's a lot of downside risk. So the best way to get around that is pay a couple $1,000s for some options. If they go big, it's big. If they whack it, instead of being down $4,000, $5,000, $6,000 on the stock, might be down $1,500 on the options. Yes, they announced an offering on the close. So I was kind of thinking, why would you make an offer the first time it broke out to the big upside? And I don't know if there was any announcement that they'd hit something successfully. But if not, that might mean they're a takeover candidate and they're trying to keep themselves a little less attractive by putting stock out. All right, what else we got? Dougly. Dougly's got a nice pattern where it's did your left-right combo. And the reason I'm pointing this one out is anytime you see that left-right combo confirmed, you want to be a buyer. The probabilities are this is about as strong as your best friend. And anytime you see this left-right combo, you want to get ready for a strong price move, whether it's a positive or a negative left-right. So I would be buying this one on a positive open tomorrow immediately. Why? Because that would be your doji sandwich. Your stochastics aren't in the overbought condition. A doji sandwich would tell us we're going higher, which also told us the 50-day moving average wasn't going to act as resistance. And this downtrend has finally been broken and moving up pretty strong. Netlinks, I'll go right to that because we're going to be looking at that. Yes, you could, Pshaw, LNK is one that, yes, you've moved 20 points on a $17 price move after your inverted hammer. You could be trading the options on this to kind of offset your downside risk. Oh, let's see. All right. Some of the ones that are acting the best are fry pan bottoms. Remember, a few weeks ago in this range, the market was just cratering. You have stocks like Ross Stores still doing this fry pan bottom. Same scenario on TJ Maxx. They're doing this rounding bottom, staying above the T-line. These have something going for them. I was going to do NLNK in a few seconds anyway, so it wasn't out of order. And what else? HGG. Nice big fry pan bottom, and there's your kind of your T-line crunch. They've come up through the 50. You can be buying this. What's your upside potential? Probably eventually up here to the 200-day moving average. A few more, and these are ones that you could comfortably put fry pan bottoms in your portfolio with knowing that a certain percentage, vast majority percentage, are going to work. There's a nice fry pan bottom, and where was it bottoming? Right here on the 200-day moving average. A little left-right combo, stayed above the T-line. Wouldn't be afraid to be buying this one. That's NKTR. TNet. There's your nice big fry pan bottom. Notice the T-line crunch. Notice the double doji broke you out. And then what did we have? A doji sandwich. Right about in this area where they broke out. That tells you stay long on this one, or you could even be buying on this one as long as it stays above the T-line. Burlington. Nice rounding bottom. Fry pan bottom. I'd be ready to buy this. Dang, that thing. That's enough to make you want to kick your grandmother. We're right here at the breakout level on a kind of a morning star. This one moves. It's then going to be now back into wave 3, same magnitude as wave 1. SAPE. Nice fry pan bottom, and what's giving this one extra stimulus? A huge belt hold signal, which tells us they've wiped out a lot of the sellers here. That usually indicates a strong move to the upside. And then the fry pan bottom potential breakout makes this a very strong probability situation. ISIS left-right combo, rounding bottom, broke out through this level. Just stay long on something like this because now it's heading back up to wave or to the original trend, which means you still have more upside. So that fry pan bottom is something that is telling you there's investor sentiment building up. You may not know what the reason is, but it's building up. This is RCPT. Announced that they had a phase 2 of one of their products has worked out. Right now, it's trading up here in the $87 range. So this is why these are relatively attractive as far as risk reward. And notice again what this one was doing a few weeks ago. It was still basing, even though the market was cratering. Oh, RCPT now at 90. All right. So I'd bought some calls right in here. I think it was on Friday afternoon. Because if they broke out through this level on, no, I'm sorry. Yeah, this was Friday afternoon. This was today. If they broke out through this level, we were heading back up to the top of this range on a quick pop. So we'll get to all of them. Don't worry. Hold your individual stock questions until when I get done, I'll say, Jim, do the double line. Then you type in your individual stocks. A lot of them you're asking about we were going to get to anyways. Okay, the bobble. The bobble is just a name that I'm giving something so that we don't have to explain each time that it comes up, hits the resistance level, pulls back to the T line. This is the bobble. It hits here, bobbles back down, and then you get ready to buy it, especially if it comes back up through the 50-day moving average. If it does, your next target is the 200-day moving average. Just a very strong, high probability trade setup. Not only do you have the slow curve, but if you break out through here and you've broken out through the resistance level, that makes your next target the 200-day moving average. CBZ, same scenario, bobble. Came up. Notice where they open this, right smack dab on the 200. I want to shoot that thing. Opened right on the 200, came back. Notice where they didn't close it. Didn't close it below the T line. Now what do you have today? You've got a kicker signal, J-hook pattern. That tells you there's going to be a lot more upside. Oh, TXTR. Came up, hit the 200, came right back to the T line. Now start buying, especially if it comes back up through the 50. What the heck? I've got this way over there. Can't read my own handwriting most of the time. What did I just do? TXTR. And a lot of the shipping companies, RYAAY. Oh, that's the reason that didn't look good. Came up, hit the 50, pulled right back to the T line, came back up. This one can be bought. If it opens positive tomorrow after a J-hook, bobble, it'd be breaking out through this downtrending channel. That's an airline. All right. And now that's different than a T-line crunch. T-line crunch didn't get up to the 50. It just kind of slowly pushed everything up through the 50-day moving average. XPO. There's probably you would consider this the resistance level. You hang on to this and see if they just keep pushing this up and break out through that territory, this acting like a T-line crunch into the resistance area. Now, the resistance area could be a moving average or another technical level like a recent high. Just move away from that thing. So, and then H, Z, and P. There's that T-line crunch. Notice what they did today, a left-right combo. Positive trading breaking out through this area. So it doesn't really matter what you call it. The name is important. It's recognizing the same thing. They both do the same thing. They're coming back up. So the name really isn't important. It's like my buddy that was working for the clothing industry, fabric industry down in South Carolina, and they had to shut down all those plants because the demand for U.S. clothes diminished. So they were looking for, he and his brother wasn't quite right, but he had helped him get a job at this company. So a new company was coming into town. It was a much more technical firm. So he went to interview for that job, and he did the interview, came out, and they said to send his brother in, even though his brother wasn't quite all there. So his brother came in, and a little while later they came out, and he didn't get the job, but his brother got the job. And he said, "What the heck are you talking about?" And he said, "Well, we're a technical firm, and your brother said he was a diesel fitter." And my buddy said, "Do you know what a diesel fitter is?" And the guy said, "No." He said, "I would sit there all day long at my sewing machine, and I would sew the elastic in the top of female underwear and around the leggings. And when I got done with each one, I'd hand it to my brother, and he would sit next to me, and he'd put them up over his head and say, 'Diesel fitter.'" So the name isn't important. It's what the effect of that chart is telling you. Okay, we have some ones that are still working well. EGHT. This one you stay long as this stays above the T line. And AMAG. AMAG, another one that's coming out of this kind of cradle type pattern. You stay long on this one as long as it stays above the T line. I can see I've got some of my severest critics out here tonight. And get ready to buy BIOF. Broke out, left-right combo, doji sandwich, indecisive pullback right to the T line. If they open this positive tomorrow, you want to be buying because you know your next target is going to be up here at the 50-day moving average. DYAX, another nice rounding bottom. There's your kicker signal. You can still be buying this one on positive trading. ACAD is another one that we've holding in the portfolio. This is another example of when you see a signal, like a big bullish engulfing signal, the bigger the signal, the more the probabilities that they've changed investor sentiment. Broke through this downtrending channel, gapped it up through that downtrending channel, and staying above the T line. You just stay long on this one. Now GPRO, I'm going to regress here for a little bit. GPRO is an example of everything was looking good, but when it opened back below the T line, this is where you have to go. I'm going to go back to the emotional part of trading. People were buying this because look how great it was on this run. Fry pan bottom or classic, J-hook pattern, strong price move. Came back down, maybe a huge another J-hook pattern, except what happened here. It failed, and it came back through the T-line. Now, this is where having the mental expectation that at least 1/3 of the trades you put on aren't going to work. And the reason I mention this is because I was the same way before candlesticks came along, that I would just say, "Oh man, this is going to be another one that will make me a lot of money." I couldn't stand it when it was going the wrong way. And what was I thinking when it went the wrong way? Maybe they'll bring it back up. Man, I'm hoping they'll bring it back up. Anytime I use the word hope, I look back and say, all right, what's the chart telling me? So this is where, again, if you put in your head that 1/3 of your trades aren't going to work, close it out and move on to something that is going to be moving in your favor. Same thing with AMBA. AMBA liked, pulled back, did a doji, indecisive pullback, but today with it closing, it actually opened and started trading below the T line. We closed it out. it was not moving in the right direction. It just tells you, get out of this one and move on to something where the probabilities are much better for you. INO, we're still holding on to, but this one has to open positive and trade positive to keep in this fry pan bottom trajectory, and hopefully this next move will be a whopper. But if they open this lower and start trading it down, you close it out, because that's not what should be happening after that doji. JC Penney for the long-term investor. When this gets back up, it's right now hugging the T-line. If this starts trading positive, you can be buying on a longer-term basis. The only reason I wouldn't, I guess you could still buy it on a short-term trading basis, because even if it moved to the 8.5 level, that's a good 15%. If it moved up to the 9.5, that's a good 40% or better return. And this is another one, long-term pick, but it's looking weak. This is Whiting. So Whiting is telling us that even though we suspect, when everybody as smart as us realize that they've got huge holdings up in the Balkan fields, it might be time to have to come out, especially if they break this area. So some of our long-term holds, we will probably close this out if it breaks below this, because if they gapped it down through the T-line, what's it basically telling us? It's telling us we could be in a bearish J-hook pattern, and we have no idea how far down it could go from this point. So we were watching to see when it was time to buy, because there wasn't really any pattern except for a down move. But now we've got a pattern set up, which is a bearish J-hook pattern. That gives us more more compelling reason to be coming out of this trade because of the pattern situation. We had recommended Posen not too long ago because of this big fry pan bottom with this dimple in here. And notice where they broke out through the 50, I'm sorry, through the 200. This one you just stay long as it stays above the T-line. And what is that? Leaf. Leaf is another one that we're holding on to. It's not a big volume trader, but it's got a very nice chart. Notice the fry pan bottom, and where did it come bouncing off? Right here off the 50, back up above the T-line. Now look for your little J-hook pattern, because notice how when they pulled it back, it's been very indecisive on the pullback. AKS, nothing you want to do here except stay long as it stays above the T-line. Why is this a good uptrending stock? Because notice what the reversal was. A left-right combo followed by a gap up through the T-line. That's as good as you can get. And we did an NLNK, ANAC. ANAC, there's that slow curve. There's your doji sandwich breakout. Notice the consolidation is very indecisive. All you can do with this one is stay long as it doesn't close back below the T-line. VCRA, consolidating sideways. Whoops. No, that was a different one. Notice it already came back and used the T-line for support. If it breaks out through this level, let's make this smaller. They got a lot of running room back up into the $12 to $13 area, a good 40% upside. A dimple is where you can kind of see a fry pan bottom, and usually right in the middle there'll be something that is severe that looks like a dimple. And so we can kind of calculate if this is the first part of the fry pan bottom, about the same area over here is when they start breaking it out. It acts like a measuring device. SCOK. Trying to go through all the ones that we've got in portfolios right now, or recommendations. There was the message. The gap up. Now they have to open this positive, making a J-hook type pattern. If they open it lower, you close out the position. It's a dud. And Lou was also a good-looking chart, but it closed back below the, uh-oh, why is that not found? They don't bring Lou up on this chart for some reason. But that was closed out today because of the close below the T line and just lost its trajectory. And CLF announced earnings today. I guess it met earnings. Didn't do too much, so you stay with this as long as it stays above the T line. Okay, a few more on the long side, and we'll get to some shorts. GIMO, this one you want to buy. This one is that fry pan bottom, and what do we know about a doji? It's going to move in the direction how they trade it. Now, they opened it a little bit lower, but immediately started taking it up. That tells me there's still more upside to GIMO. I think we did BIOF. And IMPV, there's that big Morningstar signal. Notice what they haven't been able to do. Bring it back below the T line. Stay long with the anticipation they're going to test the 200, which is this level, and then see if it breaks through that level. Dust. Whoops. Dust, nice J-hook pattern setup. You can be owning this one or buying this one on positive trading tomorrow. Notice your little doji gap up. You can see what the pattern looks like. And INCY has moved up very nicely, broke out. This is what you look at for indecisive trading right here at the resistance level. Then you got kind of your doji sandwich that broke through, telling you there's going to be more upside. LCI, kicker signal through the breakout area, tells you there's also going to be more upside. You're now back into this trend trajectory, which means there's probably going to be a 45-degree off of here. Micron, notice how they've gapped it up. Doji sandwich, gapped it up. Doji, gap up. You're not even into the overbought area yet. Next target is filling this gap right up here. You stay long until you see a sell signal. At this point, I wouldn't want to see it close back below the 50. That would tell me the sellers have taken control. And MATX, big, huge move. Notice what they did when they broke through the 50. They came back and tested the 50. And then notice what they've done, taking it right back up. And what started this uptrend? One of the most reliable reversal signals, your inverted hammer followed by a bullish confirmation the next day. KNDI, also that slow curve after your big bullish engulfing. You can still be buying this. Now, I wouldn't buy it at this point. What we'd expect at this point is for it to get through the 50. If it does, then you can be buying it. After 3 gap ups, do you recommend taking profits? I've seen that the guideline given in some of yours and other candlesticks, yes. Usually after the 3rd gap up, you want to get ready to take profits. Hold on for 1 second. Okay, so yes, usually after 3 gap ups, start looking to take profits. But in this case, that 3rd gap up was through a resistance level. So you start looking to take profits, just be a little bit more conscious. The grains, that I don't know, John. I should know that. Usually they don't do good this time of year because everybody's coming in with crops or bringing their crops in, and they're usually there's less people buying them because they're usually all bought up by the time they get to harvest time. But as we can see, corn is coming up. Now, the reason the grains might be doing well right now, because look where they came from. I mean, they've just gotten slaughtered over the last 3, 4, 5 months. Now they might be oversold as far as price, but you still watch to see if they can break this downtrending channel. Okay. ALK, Alaska Air. This is another one that observed the obvious. They've gapped it up, third gap up. You still stay long until you see a sell signal. But the more gap ups you see, usually they gap it up from over sold to overbought. That's usually. But in this case, you stay long until you see a sell signal. And Vive, there's kind of your little J-hook pattern, left-right combo. You can be buying this one on positive trading with the expectation, that they're going to come back up and test this level. Oh, this one might be the, let's see, is this BLCCF? Yeah, so that's a good-looking chart. Your big morning star signal, your pop-up, your consolidation, holding the T-line, still making the 50-day moving average your next target. Yes, you can buy the ETFs. It depends on what your risk-reward factor is. Obviously, the ETFs are going to be a little bit more subdued than buying the commodities outright. And ABCO, there's that slow curve, and where is it breaking out? Right here. Tells us the next target is probably the 50-day moving average. I think let's see. Oh, I've skipped this one. There was a point to be made here. And it was because of a left-right combo. I don't know whether it was because of over here. Anyways, this is still a good-looking chart. Notice on the pullback, still very indecisive before taking it right back up. Now, there was something there that was supposed to be a left-right combo, but well. Anyways, anytime you see that left-right combo, like we now I just goofed up on this completely. That was a bearish engulfing on Angie's list. So, all right. Some of the shorts, we went short on Juniper today because of the kicker signal. And then it came right back up, closed right on the T-line. Makes this very simple. This has to open weaker and trade weaker to stay short. Oh, that's what I skipped, was AERI. AERI, nothing you can do here. Notice this slow curve broke you out through this level. You just stay long until you see a sell signal and a close below the T-line. The oils and the oil service companies are just getting hammered. Now, we shorted CRR because notice the slow curve here. Remember, just the slow curve in itself is a good slingshot effect, whether it's bullish or bearish. But this one had a slow curve right here, slammed it for 50 points to the downside. If they keep breaking this down, this could still have some big downside to it. And Kiwi, we were going to go short on this one, and we'll still possibly go short on this one, on the basis that you've got wave one, wave two, then your doji gap down, your best friend to the downside. And notice what it did when it tried to climb back up. It hit the T-line and sold off. This becomes very simple. You put your sell stop right here at 27. If it comes back down through that level, breaking this level after a doji gap down, we're in wave three, which tells us we could go down another 12 points on this one before they find a bottom. Gomo was a good-looking long, but then did this big evening star signal. Now, is that important that we're in an uptrend and they did a bearish signal? What other factors should we be looking at? Well, basically, we should be looking at what is the trend of this market. This trend of this market pretty much tells us that every time it comes up close to a resistance level or a resistance level, they sell it off. They could be taking this one back down to the bottom of the trend channel, taking it from, what is that, the $8 range back down below the $4 range. So Gomo, keep an eye on. Tweeter, here's a good example of why you're out if it trades back below the T-line. I think Tweeter's trading down here much lower, somewhere down in the 43 range. Anyways, I don't know what their earnings were, but it's pretty much knocked them down further. So anytime I see things that are steadily trading below the T-line, close it out, because that tells you there's much less probability of this going up versus going down. Tesla, the same scenario. Notice when it came up on the blue ice failure, left-right combo. Maybe that's the one I was looking for. Left-right combo, gap down. Where's the next target? The next support level, the 200-day moving average. Notice when it came back up, this is why I was saying, keep an eye on this one, because when they're trading this indecisively to the upside, that means there's still possibility of them slamming it down again. And notice where they closed it this time, below the T-line. I'm sorry, below the 200. Means the next target is down here at the bottom of this trend channel. Rex is one of the many that looks like a bearish J-hook pattern in progress with a little gap down after failing at the T-line. This could head down much lower. SN, same scenario. This one gap down. So if they don't hold this level, these could be dropping quite a bit more. And remember, where do most people sell? They start panic selling at the bottom. So shorting some of these are going to give you some good panic sellers. Oh, I hate when I do that. PGE, I'm sure. HOS. Another bearish J-hook. Notice a little doji gap down. And CZR. Failing at the 50 again on a bearish Harami. If they open this weaker, they're probably taking this all the way back down to the bottom end of the trend channel, which means you're going to be heading down toward the $6 range. So anyways, I think that's about all I've got for tonight. Oh, let's see. Public service announcements. We've hired a training crew. I guess announcement number one is if you're fairly new at candlesticks, we're going to be doing a 2-day training, which is your full-scale training, probably on November 21st or 22nd and 23rd. That's the tentative dates. That's where you get everything all in one big ball of wax. You go through. We go through the psychology and the charts all in an orderly fashion. A corollary to that is we do have a partnership with a training group. What I've discovered through the years is that some people catch on to the way somebody teaches. Other people catch on with the way other people teach. So we've got a professional training crew that we've partnered with. We've been vetting them for the last 6 to 8 months and training them how to use candlesticks. So they're going to be, if you're talking with them, they are legitimate and they are going to be teaching probably a much broader spectrum than I do, where I'm teaching straight candlesticks with the patterns. They're going to be teaching a lot more of the technical analysis that goes in conjunction with candlesticks. So I think that was one announcement, 2 announcements. I'm sure there was another announcement that November 6th, I will be in New York doing a presentation for Metastock. Everybody's invited if you're in that area. I'll get the details out to everybody. And then I think on November 18th and 19th and 20th, I'll be in Las Vegas. So if you're close to Las Vegas, come and have some toddies. So, okay, I guess that's about it. So are there any general questions? I'm going to be there giving a presentation. I forget for which group, but like all presentations, the presentation may be an hour and a half, and you're there for 3 days, so there's plenty of time to socialize. If gap up buy candles above 50 line above 200, what are the odds of it will be going down soon? It doesn't matter where it's gapping up. If you see a gap up, especially after a buy signal, the probability is pretty strong that it's going to go up. What do you use for your scans? I use either Metastock or TC 2000. We've got formulas written for scans on Thinkorswim, and I think we're working on TradeStation. When you are using your 10-minute and 5-minute charts to tweak entries and do you use stochastics also? Yes. Same criteria. You want to see where you are on the 10-minute chart. In the 10-minute chart, the charts look just the same on the 5-minute chart, 10-minute chart. That's what soybeans look like on the daily, and that's what it looked like on the 10-minute chart. So they look the same. Toddy is a drink, I think. Don't they call it a hot toddy? There'll be a deep discount for the members, CJ, on the 22nd and 23rd. Who is it you have teaches beginners? Alex, I've always suggested to people that if you don't know how to invest, you should be learning using candlesticks, because everything else is, not everything else, but especially coming from Wall Street, that is just ass backwards the way they show people how you should be investing. That's why you never make any great returns with brokerage firms. If I was, and I even tell people, if your kids are wanting to learn to invest, teach them candlesticks first. They'll have a much better perception of what makes prices go up or down. Where there'll be a trading for better jokes, ha 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 ha, buy side. Yeah, that number, the 23rd, 22nd, 23rd will be recorded. Can you just trade candles? Yes. I just trade candlesticks. The nice thing about candlesticks is it is the accumulative knowledge of everybody buying and selling during any particular time frame. Then you can add whatever else you want to, whether it's Fibonacci numbers, whether it's trading off moving averages. Everything else can be added to those charts. Or if you've got a successful trading technique, if you add candlesticks on top of it, it's going to make it even that much better. Oh, popcorn, I don't know where you get this. Ask that. Somebody in here should know that much better than me, since I don't use them. The online trading will be online. You don't even have to get out of your pajamas. Like Groucho said, I got up this morning and I shot an elephant in my pajamas. How he got in my pajamas, I'll never know. Oh, maybe it is. That's a hot toddy with a cinnamon. You can pretty much see what the trajectory was based upon analyzing what the previous move was, and or what type of signal is I'm trying to think of one. Well, let's even go back to something like even the, oops, that's not what I want. Something like the NASDAQ is, if it came down this fast and you're getting buy signals, it could go back up pretty much that fast. I think it's the 22nd and 23rd. It'll be a Saturday and a Sunday. We usually start around 9 in the morning. We'll go to 3 or 4 in the afternoon and then start again on Sunday. Now, I say about 3 or 4. That's usually when everybody's butt gets sore and you start getting overloaded. The benefit of doing a candlestick training is you're seeing bits and pieces of it, which is hopefully all common sense on sessions like this, and you're trying to learn. But once you see everything put together or in a chronological order, then when you see it here, it's more of a reinforcement than it is a learning process at that point. What time fractals for day trading? When I'm, Don, and you can encourage, Simon, you can encourage me. When I trade, I usually, if I was, again, if I trade off the 10-minute chart. That's why if I'd been paying attention, the 10-minute chart on soybeans would have told me this was the time to start buying. Now, if this candle right here starts breaking out or starts showing promise, then I go to my 5-minute chart and say, all right, what's the 5-minute chart tell me? Well, they've broken out. Now I need to see it trading positive, staying above the T line to make my 10-minute chart to continue to confirm. And if both the 5-minute and the 10-minute are confirming, say, all right, where do I buy if it's already moved up? I don't want to make sure it doesn't come up and it's rolling over. And I'll flip down to my 1-minute chart. I don't know whether this will work somewhere. My 1-minute chart, well, they pulled it back. Whoop, they're starting to buy again. That's when I can start coming in. Now, do these pullbacks right here bother me? No, because by that time I'm in. Whoops. That's not what I wanted to do. Whoops, I'm still in the 1 minute. Let's change that. I watched to see what the 5-minute chart is doing. And if it's not coming back through the T line, I just stay long until I see a sell signal. And once it starts, then I flip back to my 10-minute chart so I don't get whipsawed. And as long as the 10-minute chart stays above the T line, I stay in it. Okay. Ed, people were asking if we got the formulas for a Thinkorswim. And Ed C is the person to ask. If you need a formula, Ed is our expert formula guy. What moving average do you use? The T line is the 8 exponential, and the 50 is the 50-day simple moving average, 200-day simple moving average, and 20-day simple moving average. And they were put on here for one simple reason, because every major money manager uses those to make their decisions, and we can see what those decisions are. Vikram, I don't know. I think it's like $990 for non-members, and it's much cheaper for members. Much cheaper. That's right, Larry. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals, and that's all candlesticks are, is the graphic depiction of investor sentiment. There's a 3-day candlestick training in Las Vegas. Is there? No, I'm just going to be there for just a few days. I forget what presentation I'm supposed to be making. I used to love to go to Las Vegas or Reno because I was going to win a fortune. But then after I started teaching candlesticks, which basically is you want to try to put the probabilities in your favor. And so when you get out there to Las Vegas, and you look at this table and say, well, the probabilities aren't in favor there. And then you look at another table and say the probabilities aren't in your favor there. And finally, by the time you walked around the whole casino, you realize the only thing you want to go play is some electronic draw poker. Okay, with that, Jim, go ahead and do the double line. And in 4.8 seconds, do the next double line. Okay, we did JCPenney. SXL, that's a big reversal. Now watch for your, again, this is why you watch for a bobble. If they fail here, it's going to wobble in between the 50 and the T-line. So if it opened lower tomorrow, I'd take profits. And then I'd just be ready to buy it if it came back up through the 50. SDS, stay short until you see a buy signal. And CLF, we did CLF, I think. This one you stay long as it stays above the T-line. HVC, this one you stay long. Again, we're looking for this gap area up here. So if they can get up there, that's at least a 20% return, and then the possibility of coming all the way up to the 50-day moving average, giving you about 100% return. OREX, this one you stay short. This was your bobble. You see a situation where they've really stretched to get to a resistance level, flip to your 10-minute chart and see what they're doing there. Then a bobble, if you, yeah, this is where I take off at least half my position. Then I would probably close out the other half as it closed back down here. The bobble needed to see a close back up above the T-line, or it stayed above the T-line, which it didn't. So you can't short this because it's below $4, but I would definitely be out of it. And if you're not out of it, you want to get out of it if it opens weaker tomorrow. GDX, stay short until you see a buy signal. There's your slow curve rolling over. GLD, gold is, again, failed at the 50. And this, it's telling you they're taking it back down. There's wave 1, wave 2, wave 3, kind of an island reversal. Shooting star, evening star signal, gap down, stay short until you see a buy signal. And FCX, another one where you stay short until you see a buy signal. SVXY, stay short. Oh, that was FS. What did I just do here? SVXY. That's just great. SVXY. This one you stay long as it stays above the T-line. If it closed back below the T-line, you can pretty well tell that this downtrending channel is still in progress. Red Hat. Red Hat is still in a downtrend until they can break this downtrending channel. As you can see, it's moving up, but there's really not a whole lot of enthusiasm just yet. TNA, stay long as it stays above the T-line. Facebook, notice what it did. Came down here, gapped back up, came right back up into the trend channel. You stay long as you don't see a sell signal and a close back below the T-line. KR. Kroger, you just stay long. Very unexciting stock, but steady Eddie. You stay long as it doesn't close below the T-line. And AMED, you stay with this one. But it definitely has to open positive and trade positive tomorrow. Otherwise, you've got a hanging man, gap down, doji, and if it opens lower, they're going to move it in the direction how they open it. and more than likely coming back down at least to the 50, but it's kind of taking the steam out of this slow curve breakout area. And CENX, another one you stay long, except you had a bearish Harami today in the overbought condition. It shouldn't come back down through today's low. If it does, it's coming back down to the T-line. So if it comes down through the low, you probably want to close it out, and then you can see what it does once it gets to the T-line. SCLN, another one where you just stay long as it stays above the T-line after it broke out of wave 2. Stay long in wave 3 until it does close back below the T-line. ARWR. Has to get up above the T-line, which it hasn't. And notice how it's climbed back up very indecisively. If it comes back down through today's low, you want to be going short. It told you that they failed the T-line. Ford still needs to climb back up above the T-line before doing anything real active with it. I don't think it's going down much further, but it needs some energy to get it to move up. CTCM. This is another one that you stay long. Let's see. Maybe I'm having a hard time seeing it because we made the chart so small. There we go. How about that? Stay long on this one as long as it stays above the T-line. And GTI, same scenario, except this has to open positive. If it opens weaker tomorrow, you've lost the trajectory and you're trading back down below the T-line after a doji. You want to be out of it right away. You can always buy it back. RAD, Rite Aid, same scenario. It has to open positive. So there's nothing wrong with closing something out when it's time to get out and getting back in when it's time to get back in. We saw that today in New Links, where they took their profits and brought it back up. Now you can get ready to buy this if it opens positive tomorrow. Yahoo, just stay long. Bullish engulfing right off the 200. Gap up through this resistance level. Big move up through this resistance level. Just stay long until you see a sell signal. And CMG, CMG. Little Morningstar signal after gap down where they sell. They sell, panic sell at the bottom. Now that was a kicker signal that didn't confirm. So that tells you that was just the exhaustion at the bottom. You can be buying this on positive trading with the expectation to watch to see what it does once it gets back up to the 50-day moving average. ACAD, the bigger the signal, the higher the probability. There's been a change of investor sentiment. Stay long until you see a sell signal. GSAT, you don't want to be in. This one needed to open positive and trade positive. You should have been out of it today. Now, the worst case scenario is you buy it back if it comes back up through today's high, telling you they're taking it back up above the T-line. Kendai, stay long. Just watch what it does now once it gets to the 50. Let's see, we did TNA, TZA. Stay short until you see a buy signal. The fact that they were able to bring it up and fail at the T-line tells you they couldn't get through. If they open this lower, tells you the 50 is not acting as support anymore. Can buy on positive trading. Is it too late after 3 gaps up? Yeah, probably this one has already gotten away. Now, if you do buy this one, you just have to be a little bit more cautious. You don't want to see it. This needs to stay above the 50. It's not unusual, and you're not in the overbought condition yet. So if you're buying, just most of the juice is gone, but there's still a possibility that your upside potential is the top of this trend channel. So you've still got a potential of another 10% to the upside. ARC, notice how it's indecisive on the pullback. You can get ready to buy this one on positive trading tomorrow also, the J-hook pattern. And notice how this one got started. coming out of the scoop pattern that bounced smack dab off the 50-day moving average. After a little inverted hammer, breakout, you stay long until you see it close below the T-line. NVAX was a good J-hook pattern. This is why when you see it setting up and they open it positive, you can be buying because the probabilities are pretty strong that you have a breakout. That's even with situations like NQ, where you had a breakout. The probabilities are pretty strong. They'll do, I think they were trading it up after hours, but an indecisive trading day or a bullish harami, and then they'll continue the uptrend because this from here to here was the message that the bulls wanted back into this one with great enthusiasm. SPCB couldn't close back below the 50. Use the T-line as support. Right now you stay long. At this point, I'd use the halfway point of this candle as my stop. If it came back down and closed below that level, you're back into the trading range. And today they told you they were breaking out of the trading range, so they shouldn't come back into it. First Solar, get ready to go short. Yes, that's a good-looking short setup. And SHPG, this one you have to be a little bit cautious. They've just now gotten through the T-line, but they're still below the 50, and they're doing it, I'm sorry, the 200, and they're doing it very indecisively. But this will make it very simple. They're going to move it in the direction of how they open this one tomorrow. The simple rule of a doji. There's your fry pan bottom. There's your breakout. I don't know what the volume is. I can't see what the volume is. But you can be buying this one on positive trading, expecting probably a 45 degree after this breakout. DVAX, or is that DVAX? Oh. Stay long on this one. DYAX. Stay long on this one, especially if they open this positive, breaking out of this this range right here. And CDNS. There's your belt hold, bullish engulfing. Close above the 50. This one wouldn't necessarily be buying, but wouldn't be afraid to be buying using the 50 as your stop tomorrow. We did NVO. That's MTDR. This one, you get ready to go short if it opens lower tomorrow. Your doji sandwich breakdown below the 50, and notice it's failed every time it's gotten up here to the 50-day moving average. So you're still on a downtrend. CELG, stay long. However, you're in the overbought condition. You've had the slingshot effect coming out of your scoop type pattern. At this point, I would use any trading below today's low as a stop because that would mean they're more than likely coming back down to the test the T-line. Con, slow, steady up move. If you own it, you stay long. Just watch what it does once it gets to the you know, the 50. Costco, kind of an ugly chart, but it hasn't been able to close back below the T-line. The important factor is, notice where they open it, at the T-line and take it up. Open it at the T-line, take it up. It means they're not willing to sell this one off. And WLT, hopefully it has big volume, but right now it needs to see something compelling to get in it. If you own it, you can stay in it, but just make sure it doesn't close below the T-line. And ACI, another one that you shouldn't be in until you see the next buy signal. KITE, stay long as it stays above the T-line. AMGN, Another one, you stay long. Not only are you above the T line, but you're staying up above the 3T line. Still a good, strong chart. You're probably moving back up to test the top of this trend channel and then see what it does from there. So we did those two. We did gold, INVN. This one you get ready to go short on any weakness tomorrow. Downtrending channel, failing at the 200, closing back below the T line with a sell signal. Suspect it could come down to the bottom of the trend channel. Now, some of these could sell off pretty hard because where do most people sell? They sell down here at the bottom. They just said, get me out of this. It's not working. Soda had a big move to the upside. If this one opens lower tomorrow, you can still be shorting this one because notice where it failed, right here at this downtrending channel. And notice what the pattern is. Dumpling top, opposite of a fry pan bottom, which means you could still get a very strong more move to the downside. Remember, all you have to do is recognize what the pattern and know what the results are. Here's a very strong hammer, belt hold type signal, another one where you can stay long. Just be aware of the lack of magnitude of return on this one. I think you're probably looking at BIOF. Be ready to buy this one on positive trading tomorrow. And TSO. TSO, you can stay long, again, if this one stays above the T line. HCT, no. HCA, stay long as it stays above the T line, but you need to break out through this level here pretty quick. Grub, there's your big belt hold bearish signal. You haven't been able to get back up above the T line. If this one, you can go short because notice where it kind of failed, all in this downtrending channel. You can go short if it comes back down through today's open. And ILMN, bullish engulfing, gap up through the resistance level, stay long until you see a sell signal. At this point, if I owned it, I'd be using today's low as my stop. It shouldn't come back down through that level. And ESRX. Another one that has to open positive and get out of this downtrending channel. Hold on, I got my mouse back up here on my mouse pad. If this opened lower, I would suspect you're still caught in this downtrending channel. It needs to open higher and trade higher and break through this level. Overall, right now, it's not a very intriguing chart. KORS, this one you buy on positive trading. Notice that it hasn't been able to close back below the T line. Now you're at the breakout level. If this opens positive, next likely target should be up at the 200-day moving average. ALXA, this one should have a 45-degree coming off of this slow rounding bottom. Seen it. Don't know what the volume is on this one. You've got a bullish engulfing. You can be buying. Just be aware of just be aware of what it does once it gets to the 50. CPHD had this gap up and red candle. The message was the gap up. You watch to see when the profit taking's over, and then you can start buying. So that's the same thing with NQ, coming out of a fry pan bottom, gap up, some profit taking, see what they do tomorrow. If they start buying this one, you want to start stepping in because that would tell you the profit taking's over. And what do we expect coming out of a fry pan bottom? A very strong price move. we did ANAC. All right. I think we did ANAC. I'm sure we did ANAC. ANAC, you just stay long. Don't want to see it come back down through today's low. BVN. Yep, you can be shorting this one, especially if it opens lower through the last resistance level. Netflix. Netflix, this is why you have to see what it does once it gets to the T line. Looks like a little failure. If this one opens lower tomorrow, you can start shorting it. That tells you when they took it up, they weren't going to go through the T line. GNW. This one you can be buying with the expectation that if they start breaking this one out, the next target is the 200-day moving average. Let's see, is this American Racks? All right, stay short. Nothing here to make you want to get in as long as it stays below the T line. Do you use MACD along with stochastics for confirmation or just stochastics? I just use stochastics. Now on some of the charts I can overlay MACD, but I don't ever use it. It's just kind of another little comfy fluffy on the chart to tell you that you're heading in the right direction. What did I just type in there? OIH, the oil service. That looks like they're all failing. This is a good area to be short. Now the time frame doesn't really matter. What we're really looking for is what's happening here and what's happened here. So it doesn't matter whether you make your chart look like this, whoops, or make your chart look like this. We're still analyzing what's happening right here. Yeah, they're all daily charts. I want to see what the daily's doing. Let's see, what time is Friday? There's sometimes that little blue, oh, oops, no, it isn't, not on here. At the top right blue bar where the ticker symbol. Oh, yes. This is the daily. So you can move to see what the 10-minute chart was doing today. It came down and then it waffled sideways. The reason I was trading crude oil is because notice what's happened on the daily. It failed here, and then crude oil, which has taken all the oil stocks down, it looks like it's rolling over and doing another wave to the downside. So if crude oil itself is heading lower, that means a lot of the oil stocks are going to be heading lower. And that's why you were seeing a lot of charts that look just like crude oil charts, where they've come down and then they're rolling over and getting ready for the that's why we're seeing a lot of these crude oil stocks selling off, because of the price of crude oil itself. Okay, I think we've got about most of them. Anyways, all right, couple more. Baidu. I don't trade the binaries. I have enough stuff to, yeah, the candlestick signals work on anything. They're just the accumulative knowledge. Baidu, I've never been a good, or hasn't been a good trader here recently, basically because of this sideways move. There's just no trend to it. Oh, Shaw. Mobley. You can stay long as it stays above the T line. Definitely needs to break out, though, here pretty soon. Okay. I don't look at the weekly charts unless I'm doing things more longer term. DDD still gap down, still below the T line, not showing any great vigor. I would stay short on this, which we're doing. And Sprint starting to roll over. This one you get ready to short on any weakness. They could be taking it right back down, if not to the bottom of the trend channel, at least coming down to test the top of the trend channel, which means you'd be heading down much lower. Let's see. I don't remember what GTI was. Yeah, GTI has to open positive to stay in it. Okay, again, the reason that you're going to get some good boosts in your portfolio, if you stick with the patterns, the probabilities are something good's going to happen in one of them. And so hopefully when this one opens tomorrow, right now, oops, I guess it was trading in the $87 area or the $90 area. All right, it was BOFI. Oh, my mistake. Big left-right or big left-right combo. Stay long on this one. Just be conscious of what it does once it gets to the 50, because that's part of this downtrending channel. Is that ISR? This one has to get up through the moving averages. This could be in a bobble, which means they can take it back down to the T line. All right, everybody, let's call it a night. We'll see everybody in the chat rooms all bright and early. We'll see you then.